Robschild. No investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and of course, a touch of crystal ball gazing. Today is Wednesday, March 19th, 2025. Today's episode begins with the headline, FOMC, less hawkish than expected, yet uncertainty increased. I only really say less hawkish than expected because if you just looked at the charts, pretty much after 2 o'clock, pretty much everything went up, which indicates that the market took it as less hawkish than what they may have been expecting. The market was giving a sigh of relief. The VIX is down. Metals are up. Stocks are up. Bitcoin's up. We'll get through the charts when we get there. I want to talk about this part, not my words, the words of the Fed themselves. Uncertainty increased. CNBC and other news outlets often put this out. It's basically the Fed statement in a nutshell. This is the whole thing right here, what they're saying. And what's in black was the same as the last release. What's in red and underlined is what's added, and what's red with a strike through line through it has been taken out. So while before it said, I'll scroll in here, the committee judges that the risks to achieving its employment and inflation goals are roughly in balance. It struck that out and replaced it with uncertainty around the economic outlook increased or has increased. So, I mean, the Fed came out today and said, we're still looking at 2 cuts for this year. And the Fed funds futures barely budged at all. So that's why I say less hawkish than expected. The market reacted to this like dovish news came out, yet, no changes in the Fed funds futures. And, caution here, they're saying explicitly that uncertainty increased. They're not saying everything's fine here. So I'm not sure, what exactly Mr. Market's thinking here. Uncertainty is increasing, yet Mr. Market is interpreting this like uncertainty has decreased. So yeah, less hawkish than expected. And barely any movement in the Fed funds futures. As you can see, this column here is the previous day probability going to today's. So for next month, we move to a tiny bit more chance of a cut in May. Looking out to June, like 1% a greater chance for one cut. And then, in total, that's maybe 3%. So yeah, it barely budged though. I think today's market action shows Mr. Market getting a little overly excited here. But, let's see what happens tomorrow, the hangover day off of this news. Next agenda item for today, gold is getting greedy. Calm down, Drekmar. I know we all love gold, especially when it's really expensive, Very ironically, when gold gets ridiculously cheap, when it drops by 50%, no one wants it. They say, a brick of gold, what am I going to do with that? Plus, it's like nobody wants it. It's cheap now. And when, the time that everyone should be loading up on as much gold as possible is the exact same time when nobody wants gold, and when gold's going to the moon is the time to be selling it or even shorting it. People see it as the greatest thing. Yeah, I know, I like gold too. I know, Jackmar, calm down. I did take a bit of a short today on gold. Tiny little position, but better traders than me are, besides the fact that I see gold is overvalued and overextended here, we're in this parallel channel here, and we've pretty much hit the top. So GDXD, I just got a tiny little position. I'm expecting us to at least get back down to the middle of this channel in the near term. So gold is getting greedy. What do I mean by this? Well, for one, we are at all-time highs, so that's greedy in of itself. I've brought up this chart before showing TIPS. This is Treasury Inflation Protected Securities versus gold price, and how we've had this sort of massive divergence really since September of 2022, when gold just went to the moon, and TIPS, the thing that are supposed to protect you against inflation through the treasuries market, is going absolutely flat here. They can't both be right. You can't have TIPS just going flat forever while gold just goes to the moon forever. These jaws will shut. You know, related to treasuries, they are extremely expensive. I mean, gold, sorry, is very expensive. Also to copper. While copper has even been getting a pretty good bid lately, we're, you know, at the very, very bottom end of this copper to gold ratio, suggesting that, you know, relative to copper, gold is extremely, extremely expensive. Worse than that, real estate to gold ratio, the cost, you know, how much gold does it cost to buy a house, is near historic lows. We're at the bottom of this chart. So gold's very expensive to the treasury market. It's very expensive to copper. It's very expensive to real estate. All of these things are not super cheap either, relatively speaking, especially to income. So, I mean, what's wrong? Our income's about to, you know, double, triple. Our home price is about to triple. Or is copper about to triple? Is everything about to triple up to gold? Or is it more likely that gold will come down to, you know, a more normal level? I suspect there might be a little bit of both, but I suspect that gold is a bit overvalued at this point. And for reference, I brought this chart up many times, home price to income ratio. Housing has basically never been more expensive, costing 7 years of a median income for a median house. This is far higher than the top of the housing bubble of the Great Financial Crisis. Next up, the community topics, the gold certificate. I got a comment on one of my videos asking, hey, I noticed the thing on your wall that you just put up there. What is it? As a serious value investor, I wanted to, you know, see if I could get into the Value Investors Club. Apparently, this club, in order to see the latest ideas in this club, you have to apply for it and you have to be accepted. One in 15 people get into it about, and people in there, a number of them are famous hedge fund managers that have made really good calls, and of course you'll get good and bad calls anywhere. But yeah, so this is my rejection to entering the club for Robschild. Granted, you know, my application, I submitted the idea as if it was really just an application and not an idea to be actually posted on the site. So I think the way that I wrote my idea probably may have been off-putting. So I probably will try again, but I find it funny because I've put so much work and effort into figuring out value investing, and here's a rejection letter into a value investing club. And I already have criticisms of this club here, because it's open to anybody seeing ideas that are 45 days and older, and they're really not even close to what I would consider to be value investing. But I have this on my wall to motivate me, to help motivate me to beat them all. Coming up later this week, we have on Friday the leading index coming out at 10 a.m. This had been dropping sharply to the downside, flattening very recently. This is a huge report for me. A lot bigger than the FOMC report today. I mean, the FOMC, what did they do? Nothing. They didn't say anything. There was nothing. There was nothing there. And then the Fed funds barely budged. So nothing's changed in my view. This could change things. The leading index. This is a good one to keep very close eye on. So yeah, and before we move on, thank you so much for watching. Thank you for subscribing. I'm almost to that 1,000 subscriber mark that I want to get to, and thank you so much for the support. It's been amazing. You guys are the best. Before we get to the charts, obligatory daily reminders, macro update 2/11/25. That video, watch it to hear me explain my daily reminders. No changes there, and no changes in my crystal ball ratings nor portfolio. Watch portfolio update to 1125 to hear me explain it. The bulls and the bears agree to disagree. The S&P 500 melting up a little bit, 1% today. I'm more curious what will happen, honestly, Thursday and Friday, especially with the leading indicators coming out on Friday. Mr. Market, again, on today's FOMC, obviously had a sigh of relief. I mean, it was at 2 o'clock and 2:30 when everything came out, when the market rose, dipped, and then ended higher. So I don't know, maybe it's institutions and traders trying to get as many people in the market before they flush it to the downside. I don't really know. I'll add that the VIX, pricing of options contracts, notably we broke below the $20 mark, and the VIX futures term structure is back into contango, so no more backwardation, which means the alarm bell has stopped ringing. We're not ringing the alarm bell anymore, I guess. Yeah, again, less hawkish than expected, it seems, what these markets are saying. Yet when we take a look at the CNN business fear and greed index, this is still in an extreme fear mode. So according to this, we're not out of the woods yet. That has the potential to change over the next few days, especially seeing the VIX cool off here, but we'll see. I mentioned yesterday for a few days, the 10-year Treasury note yield looked like we were in this very clear wedge that had been consolidating, and we broke down out of it. And so, like I've been saying, yields have been itching to go lower, and we're seeing that today. Another thing I get out of this breakout of this pattern of the 10-year Treasury note yield is that the Fed didn't come out as being too dovish. What can happen is if the Fed comes out as being too dovish, it can signal, worries over inflation, maybe not being so good. And so the way I see the 10-year note yield dropping here is that, they were hawkish enough. That's the way I'd see it, to allow the 10-year Treasury note to drop. While we're talking about the 10-year Treasury note yield, I want to bring up real quick the 10-year minus 3-month. Again, throughout history, when it gets below zero and uninverts, you get a recession pretty much every time. Today, with it dropping further below zero, this is inverting again. This is the 10-year note saying, okay, well, guess what? We know, looking out into the future, rates are more likely, especially just day to day, from yesterday to today, the market's seeing more likelihood of more cuts looking forward into the future. Again, the 10-year note yield is based on yields for the next 10 years versus only 3 months, so without the Fed funds futures moving very much and the 10-year note yield dropping here, we're inverting further now, which again can signal, the longer we're inverted, the longer this goes down and stays under, it literally means that then the Fed is acting with their current monetary policy as to actually strangling the economy. We're back to strangling mode. The Fed has its hands around the economy's neck right now. That's the way the yields are seeing this. The way I've always seen this is the longer and harder that you're strangling the economy, the worse the eventual outcome is. So we'll see how this plays out. Since the Fed data on junk bond credit spreads is delayed by a day, we don't see today's credit spread until tomorrow. I like to use HYG as a leading proxy of high yield corporate debt with a huge green candle to the upside. Obviously, credit spreads are getting back to insanely tight range again, and I would refer it to as dangerously tight. It wouldn't surprise me if later this week we see this reverse completely, maybe with like one of these big red candle things that just engulfs a whole bunch of candles. But yeah, we'll see. Also related to today's title, less hawkish than expected. I mean, yeah, Bitcoin getting a bid here So again, good measure of like global economic liquidity, or economic activity and global liquidity, showing being positive just for today. Yeah, again, I want to see how the rest of the week plays out. I'm pretty much saying the same thing because I'm seeing the same thing in every chart. It's the same reaction to this FOMC. Also wanted to bring up the dollar index only because we've been sort of consolidating here. Today moved a little bit in the dollar, but dollar index not moving much. And then oil showing a tiny bit of strength, not very much though. Again, we are at this bottom trend line that goes back to 2021. Oil is struggling to, I'd say it's struggling at this level, and I don't think it has much more gas in the tank. Excuse the pun. I don't know if that's a pun. Anyway, very notably, copper got a very big bid today, now $5.14. I've been hearing other people talk about copper. I've been talking about copper, like what is copper doing here? Why does it keep going up? If you overlay it with a chart of Chinese equities, they tend to perform like exactly the same because of how much copper is used in China. So I think I'm buying the narrative now that this has more to do with China than anything. But it is interesting that, on our FOMC day, we have copper going up. KWeb, one of my personal largest holdings, seemingly to be building. I call this a bull flag just based on this green candle and, fighting at this top area. That's a good sign for the bulls in China. Again, I'm looking for $50 eventually. EWZ, also, one of my largest holdings, is Brazilian equities. Something I just noticed today that I didn't point out before. We got a head and shoulders, inverse head and shoulders that we are clearly above. So short-term target, just on, chart patterns wise. Again, I'm not really a chartist or a trader, but I can see it, if this plays out the way probabilities suggest, it looks like we're headed pretty quickly and confidently around $31 in EWZ. And last chart of the day, the 10-year break-even inflation rate. I always like to see what's going on here. We're no longer falling straight down to oblivion. Yeah, so the last 2 days going up just a tiny bit by 1/100th of a percent. This could be, we're forming, it is a fight zone now. Before it was just dropping, now it's at least a fight zone. No longer just straight up dropping. In a nutshell, the FOMC doesn't really say anything except for uncertainty increased, and yet the markets get a bid. Not sure what to think of that. I suspect we'll have a reversal for the rest of the week, but, that's just me and my crystal ball. And that's all, of course, today from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.